Okay, I think we have about 32 people. I think we'll get started here. Once again, warm welcome to all of you.
ಇಲ್ಲ ಹೇಳಿದ್ದಾರೆ ಅದಕ್ಕೆ ಬರ್ತಾರೆ ನಾನು.
Request all of you to mute yourself. Hemant and Sundar and Valli ma'am, if you can switch on your video briefly. So in today, we primarily focused, the target or subject was clarifications on income tax matters, and this was motivated by our GC colleague Valli Srinivasan, who's the zonal leader also of the zone covering the Bellandur and surrounding area. We were hoping to have Satish for the opening remarks, but he is still stuck up in a previous meeting. He will join a little late. I will briefly cover about BAF and about the Parihara sessions, a slide each only. And then we will dive into the details. Today we have both Sundar and Hemant. Sundararajan is a finance professional, a treasurer of BAF right now in the current term as well as the previous term, and he's been the president of the BAF Jayanagar cluster 2018-21. Thank you, Sundar, for being part of this session and addressing questions of all the members. Hemant Pai is a chartered accountant and an income tax practitioner. He is also here with us. And he is the author of the BAF Income Tax Primer, which was published and shared with our members a few months back. And he is also a former governing council member. I will cover these points on the BAF and Parihara, and thereafter we will dive into the question and answers directly, and Sundar and Hemant will be addressing those questions. And first we'll address the income tax notices related questions, then other income tax matters. A few questions have come, not just about notices, but about other subjects. Then we have quite a few other queries about GST and some investments and some operational processes. These are all questions that we've received while you have all registered while submitting your intent to participate in this session. So once that is there, if the time permits, we will take up any queries that we receive on chat also. With that, I will go forward. So some of you may be familiar, most of you may be familiar, but for the benefit of a few others, BAF was founded in 2013. Our presence is across Greater Bangalore, which is not just the BBMP, but just around further or beyond BBMP zone also, in the Greater Bangalore region. We have 21 elected governing council members elected from the member network. The member network is 1,343 members strong at this point in time. And out of the 198 BBMP wards, we are present in over 180 wards. And we have grouped ourselves as a geographical cluster. Each of you will belong to one geographical cluster or the other. For example, Sundar belongs to the Banashankari Jayanagar cluster. Hemant belongs to Yelahanka cluster. Valli Srinivasan is in Bellandur cluster. I am in Malleshwaram cluster. Each of us are spread across the length and breadth of Greater Bangalore. And more than about 300,000 households are part of this network of 1,343 apartment complexes and residential communities. May I request all of you to please mute your audio button. And about 1.5 million people, which is 15 lakhs people, either live or work, which means, including our service providers, who support us in our communities, etc. Our effect, impact, span of influence, goes across up to 1.5 million people. And we have focused to support our members in a variety of areas: energy, water, safety, municipal affairs, legal and policy, apart from so many others. This is a brief about BAF. About Parihara, some of you I can see have attended a few other Parihara sessions. We've conducted a wide ranging Parihara on a wide range of subjects. Two sessions focus on all the subjects, generic two sessions called orientation sessions. We did a e-khata, which is a very hot subject just a few days back. Sometime back, we focus on animal husbandry and pets and those kind of issues. Also, we had a Parihara. We had a case study on rooftop solar implementation. We've had a session on risk mitigation for managing committees as to how you can protect your community's interests and your interests from any potential risk. Then we've had how to go about resolving issues, conflicts through a mediation and arbitration session with the camp. And specifically on water, last year we had a lot of challenges. So we've had multiple rounds of conversations on the BAF Parihara. One is how to get Kaveri connections, how to go about managing your water resources. We had an interaction with the BWSSB chairman addressing, our concerns. We did a training program on how to go about applying CFO for KSPCB, etc. Then we had an important workshop on treated used water, on which we worked and influenced government of Karnataka on policy level also. And we were successful in getting two key policies implemented. And we worked with the government of Karnataka and KSPCB on those. And how to go about practical implementation. We had a day-long session in collaboration with IIM Bangalore. So today's session is on clarifications on income tax matters. And an upcoming session soon will be on rooftop solar, EV charging, and general electrical subjects. Watch out for that advisory also. So, so I have a question. What is the due date for income tax returns filing? If you can please, I'll give you 30 seconds. If you can please enter your responses on chat box, it'll be nice. So today's session is all on income tax, primarily on income tax, not all. Good, I've got a few responses. Thank you, Lovely, for responding. Yes. Oh, where am I? Yes, the due date for filing income tax returns is 31st of July. So that depends on that's the annual date where most are applicable. Sambit has asked whether audit or non-audit. We'll come to that if you can keep this in reserve, Sambit. 31st July is the due date for filing returns. Okay, so we have now come to this slide, which is the tax slab rates. I want to request Hemant to spend a couple of minutes on this, explaining this slide. Hemant, are you there?
Yes, sir, I'm there. Am I audible?
Yes, very clearly.
Okay, so the root problem appears to be that whether slab rates are applicable or whether MMR, that is maximum marginal rate, is applicable. So until last year, by and large, the consensus was MMR is applicable for two reasons. In cases where the share of the association is known, in such cases where the income of none of the members of the association exceeds the basic limit, that is, let's say 2.5 lakhs, in such a case, the slab rates would be applicable. But in most of the associations, there'll be at least one member whose income exceeds the basic exemption limit, that is 2.5 lakhs. In such cases, the MMR, that is maximum marginal rate, would be applicable. However, from last year onwards, the Act introduced a new section, or rather, introduced a subsection called 1A of 115 BAC, which gave an option, including two associations, to opt for slab rates. So for this year, I mean the year for which we have filed the return a few months ago, these would be the slab rates. Now for the next year, the slab rates would be different, but I have not included that. But for the issue on hand, as per me, these are the slab rates applicable to an association.
Okay. So down the line, there are some questions, Hemant. We'll come back.
Arun, just hold on.
Arun
Just
sir,
hold
should
on.
I mention, should I talk about what constitutes income and what does not constitute income?
Hemant,
Sure.
let me just let me just intervene. I think first what we should do is to avail of this and tax rates under the new regime. Can you specify in the return what should the associations have done generally? What sort of noting or marking they should have done at a general level? Beyond that, specific what they have got in their return, they can talk to their CAs. But at a general level, what you would have wanted them to mention if you were to filling up the return?
No. So for an association registered under KSR 1960 and KOA 1972, the PAN by default would be, the status would be an AOP. And this regime is by default, it will be, when you file the return, it will be the new regime unless you opt out. So I'm reasonably sure that nobody has opted out of the new regime, because if you go under the old regime, then MMR would be applicable. So there is nothing to be done specifically to avail this slab rate.
What about the question on the ownership? You were mentioning that as another point, no?
Sorry?
No, you are also mentioning about the ownership, the first point which you mentioned.
No. The associations registered under Karnataka Societies Registration Act 1960 and associations under KOA Act would be treated as AOPs. And whenever they file return, by default, this new regime would be opted unless they opt out by filing a specific form, which I think nobody has done that.
Nobody would have done. I agree, but with these sort of markings, quite a few have got assessments with the MMR.
Yes.
So you are also mentioning one more point, that the ownership share is known or something you were mentioning. You were mentioning just now. You mentioned 2 points. No? What is the first one?
So that issue is also discussed in the BAF IT primer. So until last year,
Yeah.
whether you get benefit of slab rates or not, dependent on whether the share of each member in the association is known or unknown. If it is known, then such income of the association may be taxed in the hands of the individual members, which is highly impractical, and no association will do that. Or if the association wants to avail these slab rates until last year, then none of the members should have income that exceeds basic exemption limit, that is 2.5 lakhs or 3 lakhs, as the case may be. So many of the associations that I know of, used to avail the slab rates incorrectly by mentioning that none of the members' income exceeds 2.5 lakhs, which may not be factually right. But since generally
Okay.
association returns don't get picked up for scrutiny, I think for many years people have been filing that. But I believe until last year, the correct rate would be MMR. But from this year, that is the return for which we have filed, we can avail the slab rates.
But what do we do for cases where people have got assessed under the MMR?
Yeah, so my understanding is that there may be two reasons why people have got notices. The first notice, the first reason would be that there is some mistake in the return, because the return is a very lengthy document and we have to select multiple fields. If any field has been selected incorrectly or some field that ought to have been selected has not been selected, then there is a possibility that while calculating, the software has considered the wrong rates. The second reason and the most likely reason as per me is that this amendment has not been captured in the income tax software. So let us first understand how the process works. Once we file a return, after a month or so, there is something called a CPC, Centralized Processing Center of the Income Tax Department, which is a computer algorithm that processes our return and gives an intimation under section 143(1). So this order, it is actually an intimation and not an order, but in general parlance, we say it's an order, which will say you have to pay certain income tax as demand. This is a computer generated order and there is no manual intervention. So for this computer generated order or intimation to be appropriate, the software has to consider the amendments that happen on a yearly basis. So my best guess is that, and it happens very often in income tax, that there has been some problem with the software and the software is not considering the amendment that was brought in by the previous budget.
Okay.
Okay, so my suggestion for the members would be whoever have got assessment under marginal tax rate will be to go back to your CA, ask them to check all the filling up of the fields, which Hemant was just now saying, and it's possible that some fields might have been wrongly filled up, or maybe you have not elected to fill up, which could have led to this marginal taxation rate being applied, and file a revised return. I understand that some associations have refiled the return and they have got the refund also after the MMR was initially assessed.
Have something.
Getting some external noise.
I request all of you to please pause. Please mute your.
Have to go wrong way. Wrong way. Have to go to Kenya, take the car again, go to Kelaka.
Satish, can you mute yourself?
I
Satish,
can take that.
Satish, can you mute? Okay. Hemant, anything else on this screen? Or shall we move forward?
So as Sundar sir mentioned, that am I audible?
Yes.
Yeah, perfect. Go ahead.
Yes. The first step would be to once again cross-check if all the fields are appropriately filled in the return. And despite that, if we are not able to find any flaw or any mistake in the return, then the next step would be to file an appeal. There is also a process of filing for rectification, but in my opinion, that would be futile exercise, because once you file for rectification, the same return gets reprocessed with the same algorithm. So if there is a problem with the algorithm, then the outcome would be once again would be the same. And if you get a revised order, then ideally you should be filing appeals on two orders, that is the revised order and the original order. So if the problem is indeed with the income tax department's software, then the best way would be to immediately file an appeal. You should have ideally filed an appeal within 1 month of receiving the order, but you can file it belatedly, but it is better that you file it as soon as possible.
Okay. So I'm getting to the first question. Sambit, are you there? You there, right? I saw Sambit was there. Sambit says recently we filed an income tax returns for the assessment year for 24-25. I have masked the numbers. The income was X, but we computed tax on the income which came to Y1. Department has asked us to pay at 30%, which comes to Y2, and the interest thereon comes to makes it Y3, wherein Y3 is 40 times Y1. So what is the remediation available?
Sir, as per me, the remedy is to file an appeal before the Commissioner of Income Tax Appeal. This appeal is online and completely faceless, and it has to be filed within 1 month from the date of receipt of the order. But it can be filed belatedly also. But the more delay you take, your case becomes weaker.
No, so I have a further question. So I went to the income tax site, and there is a link I have also attached here, which clearly says, yeah, the new tax rates are applicable, but then MMR is still applicable. It doesn't say MMR is not applicable in case of new. So even if you choose 115 BAC, it doesn't say MMR is not applicable.
No, 115 BAC is very clear, and the
If you can give me
provision.
the exactly which section you are referring to in the because when I apply for the appeal, I need to mention that because
Hey,
it seems there is a problem in income tax department's clarity, because the clarification they have given in this link which I have provided, where it is clearly saying that yeah, the tax rate is according to 115 BAC, but still the MMR is applicable.
115 BAC subsection 1A is very clear. In fact, the table that Arun sir showed in the PPT is straight away taken from the provision itself. It's very clear. 115 BAC 1A.
But that doesn't rule out the possibility of applying rules 167, right? Because this MMR is coming from 167. 115 BAC doesn't say 167 is not applicable. Or does it say so?
Just give me a moment. I'm opening the section. Yes, it will prevail. 115 BAC will prevail over 167B because 115 BAC 1A starts with what we call as a non-obstante clause. That means it will have overriding effect over other provisions. It says notwithstanding anything contained in this act.
Sure. Thanks a lot. I just wanted that clarity. So that will make me file for a appeal definitely. Thank you very much.
Thank you.
Yeah, and maybe you want to mention that specific clause also, Sambit.
We will have to, because if it is an appeal, it has to go as a legal process. So it has to go with a proper clause being
Right.
specified.
Right. Thank you, Sambit. And I remember you've been
If,
interacting with us on email also.
Arun sir, just this thing. If anybody, what I can do is I can perhaps prepare a pro forma appeal, because the appeal has to be in a specific format. There has to be a statement of facts and grounds of appeal. If it helps member, I can perhaps share a template and then they can speak to their CA and modify it accordingly.
Sure, that will be wonderful if you can share it with us at BAF Hemant. We will, suitably distribute it to whoever is in need of that.
Yes. Yeah, only request is that it not be blindly used by the members themselves without taking consultation from their CAs or anybody else.
True.
I think Hemant, you should put the disclaimer in the document itself.
Yeah.
And because it is meant for the people who are asking specific questions and not for free sharing with all the other associations.
Yeah.
As you said in the beginning, each association might have different reasons for whatever assessment order they have received.
Yes, yes.
Yeah,
It
it
will
won't be
help
a one
instead of
size fits all.
them trying to figure out the method and the format, it will be easier if they decide to file an appeal.
Okay.
Yes.
So Sambit, thank you for that message. Email interaction also we've had. So this should
Arun,
hopefully
let's go to
take.
the Arun. Let's quickly go to the next few questions. It's
Yes.
already 8:28.
Yeah, so Sai Babu is asking clarification regarding recent IT notices. Sai Babu, are you there? What is
Yeah,
it
this has been,
specifically you've not mentioned?
Yes, it's regarding same only.
Okay.
With Kumar, yes.
Okay, it's covered.
Okay,
Sai
we'll
Babu.
move on then,
Okay.
Sai Babu.
Sorry.
Thank you.
Sorry, I'm Sudarshan here along with Sai Babu. Only I had one additional request. Along with the IT notice, we also received a surcharge has been added to that 25%. So Hemant, can you tell us something about why the surcharge they are put separately?
So surcharge is applicable if your taxable income exceeds 50 lakhs.
Okay,
So
but
if your income as per department, not as per you, if the
Mhm.
department feels your taxable income exceeds 50 lakhs, then surcharge would be applicable.
Yeah, they have clearly mentioned that the income is below 50 lakhs and they put the tax liability also below 10 lakhs, but they put the surcharge of 25% on that. So I'm surprised to see that.
I would say that's one more glitch.
Okay.
So we have
Understood.
two associations, sir. Both two associations also same notice. So 25%, both applied.
Sir, the software that income tax uses for processing the returns is a work in progress from last many years. So each year they identify glitches, they rectify the glitches. So very highly likely that this is also another glitch.
Okay.
But all of you, please go ahead and file the appeal. That's very important.
Okay.
Yes, sir.
So I want to clarify one more thing. See, many people do not choose the appellate route and they instead try to meet the officer and all that. But now most of the things are faceless, so that may not be very effective as on date. And rectification and appeals can both be filed at the same time. You can pursue both the available routes, and whichever works, the other one can be dropped. If you win the appeal, then you can withdraw the rectification application. If your rectification application is allowed, then you can withdraw the appeal.
Yes, shall I go forward, Hemant?
Yes, yes.
Okay, thank you. Okay, a quick quiz. While we are at it, most of you are treasurers,
why,
presidents of the association. We levy a manual membership at BAF. Which cycle do we follow? April to March or Jan to December? I'll give you a quick 15 seconds to enter your response.
Okay, everyone seems to be aware of this, Arun.
Okay. Okay, so the cycle is actually April to March, and some of you, for registrants, we couldn't see some of the payments as on 5th of January. So please look at and see whether it is actually pending or you paid and we have not recorded. Please take a look at it and reach out to the treasurer and say these are the payment details. Thank you so much. The next set of questions, starting with Arun Trivedi. What rules have changed? Any notifications can be shared? Are there any rule changes, Hemant or Sundar? One of you can take it.
No, I think Hemant has answered in elaborate manner this question. As he said, most of the issues currently with regard to apartment taxation, no rules have changed. Whatever is there last year is continuing to be applicable. But in the assessment, there are some technical glitches, and Hemant advised that even though these are technical glitches and quite a few of them occur every year, we should go. associations who have got higher tax rate applied, and they should go ahead and file an appeal, use the help of their auditor and chartered accountant. Because I see quite a few basic questions where it is okay to ask BAF because you're all members, but we should be much more active and ask all these questions with the auditor and ask him to file the appeal. Please engage in slightly more detailed discussion with the auditor. And if you still have doubts, reach out individually to me, treasurer at baf.org.in, and I will, wherever required, reach out to Hemant also.
Okay. Savita, are you there? What is the difference between new and old tax regime? Hemant, quickly, if you can respond to this.
So old tax regime, as per me, was by default MMR would be applicable, unless, as I mentioned earlier, there is the share of the members is known and vice versa. That's a very complicated matrix. The new tax regime, which is 115 BAC 1A, says that notwithstanding anything contained in other provisions, there'll be a slab rate. So by opting for the new regime, or in this case, in the case of AOP, by default we are opting for new regime unless you opt out. The benefit is that you have to pay the taxes as per the slab rate. So there'll be a huge difference if you opt for the new regime. There'll be substantial savings in the tax.
Thanks, Hemant.
Okay, thank you, Savita. Vivek says, what is the rate of tax and surcharge applicable? Rate
We
of
have
tax was covered. Any surcharges? Can you explain, Hemant?
I will share the table after this meeting.
Oh, okay, okay. So if you can WhatsApp it also.
What I'll do is I'll prepare a table. The table that was included in the PPT had only the basic tax rate. I'll prepare a table with surcharge and with cess, so
Okay,
that
lovely.
they'll know the
Sure.
effective tax rate.
Sure. I'll go back to all the registrants
Yes,
back as an
yes.
email thereafter.
Yes.
Okay. Shankar Ram says, why increase the tax amount? And Umesh says there is a sudden increase in tax rates from individual slab rate directly to 30% and above. Reasons not known. Would like to know any representation. You want to take these questions?
I would say
Okay.
there is no increase in the tax amount.
Ah,
In fact, there is a decrease effectively because the slabs are being increased every year. So there is no increase, but effectively there is a decrease. But because of the confusion between MMR and slab rate, in some cases we are getting a feeling that they have increased, but it is not so. If there is a mistake in the return, or if there is a mistake in the software from department side, we have to take appropriate remedy and file an appeal. And for Umesh sir, I know because he had some appeal which was filed recently, and I think there has been a favorable order. So the general perception is appeal is we have to go to courts and what we see on movies. It is not so. It's a fairly simple process, and you can expect a resolution within 6 months or maximum 1 year. And the members of the association, the managing committee people, don't have to do anything. Once the appeal is filed, the replies are filed online. Everything is online. You never have to visit the department. But if the demand remains unpaid, then department can attach your bank accounts, make it inoperable, and they can take the disputed tax, which is mentioned in the demand, plus interest that starts running from the day of the demand. They can take it from your account, and if your accounts are blocked, it will be impossible to run the association. So I would say the moment there is a demand, whether the demand is right or wrong is secondary. You have to take remedial action.
Hemant, Shankar Ram here. The question is, all along, all these years, almost since 10 years, we are running association. We used to get a refund, but this is the first time we got a demand. So that is the reason we are a little confused.
Yeah, I understand, sir, but there has been no increase in the tax amount.
Hemant, one clarification here. Umesh,
Yes, sir.
see, earlier we were treated as association of persons, and up to 2.5 lakhs we never used to pay any tax. whatever the TDS deducted, we used to get refund. Suddenly, as per new version, they are charging more than 30% now with cess and other things. From our income was around within 2 lakhs or 2.5 lakhs. So it was nil. Now it has jumped to nearly 75,000. It is a big change. So my request was, as a federation, if there is a sudden change, it will affect the small and medium apartments like 50, 100, wherever their income is within 2-3 lakhs, they have to pay huge tax from nil to 75,000. That's what my concern. We have to address a letter to finance minister expressing our concern. Is there any attempt? Or if there is no attempt, we request you to, we request GC to make an attempt on this.
No, sir. There is no change in the tax rate. I mean, there is no increase in the tax rate. There is actually a decrease in the tax rate. The demand is because of the change from slab rate to MMR, which the income tax software or the algorithm is not recognizing the slab rate for various reasons. So once you file an appeal, I feel that problem will be solved.
Thanks to your guidance, we have filed an appeal and it is under process. Well, mostly we may expect any day a favorable order.
Yes.
Umesh,
Anyhow, thank you
just
for
to
your
answer,
guidance.
Umesh,
Yes, sir.
Umesh, I just want to add to Umesh. See, this is not a grievance apparent in the tax rates or in the tax assessments because the section specifically says that the new scheme will be applicable and which are prescribing lower rates, whereas earlier MMR was applicable if for certain categories. So it is only a assessment software there is a glitch, and that any representation to finance ministry will not remove that glitch. You will still get assessed under the highest rate, and that appeal is the only solution which can provide relief to the associations, whether they are small or big. I think they should do all that if they have got assessed under 30% tax rate immediately, as he said, 30 days, or if 30 days are over, please do it still.
Okay, thank you, sir. Thank you.
So I want to take one question from the chat box, which I feel is very relevant. From Mr. Prabhu Shankar. Am I audible?
Yes,
Yes,
clearly
yes.
audible.
Yes. It says that we have incorrectly filed returns. Will they go back and look previous years also? If the income is less than 50 lakhs, they can go back up to 3 years. If it is if the income which is incorrectly filed or escaped assessment or evaded income is more than 50 lakhs, then they can go up to 5 years now. But very unlikely that they will do so. So none of the members need to worry about them opening previous years. Very highly unlikely.
Okay. Hemant, I will anyway be taking up all the chat questions towards the end.
Okay.
Yeah.
Okay.
Hello,
so
my name is George. Can I ask a question?
Sir, can you please put it on chat box and we'll come back to you. There is a
I'll do-
whole set of questions. We
I'll
want
do
to
that.
finish that on priority.
Yeah.
Thank you. Subramaniam, is Mr. Subramaniam there? So he's given this information and asked for your thoughts. So he's given a link for the Taxman website. Hemant, do you want to take
Yes,
this?
sir. I have seen this, and I think I've had a word with him personally also.
Okay.
The association format that we follow in Karnataka is predominantly AOP, which is registered under KSR Act and KOA Act 1972 and 1960. There is also a Karnataka Cooperative Society Act 1959. The model of apartment ownership through a cooperative society is primarily followed in Maharashtra, wherein the land and everything is owned by the cooperative society, and the members own a share in such cooperative society, and they become a deemed owner. In Karnataka, we follow the method of absolute ownership. The association does only the maintenance; it does not own either the land or the building. It is owned by the individual members. So the structure and the legal entity are very different between cooperative society and AOP. The case laws that are referred are pertain to cooperative societies, and these case laws are not applicable to us unless any apartment is registered under Karnataka Cooperative Society Act 1959. Then the entire tax structure would be totally be different, and we need to have a different seminar on that. This is restricted to KOA and KSR associations.
Okay, thank you for the clarity. I hope Mr. Subramaniam is there and he heard this. We'll move forward. Aziz Mahbub, are you there? And he has these two questions, Hemant.
Yeah, I'm reading that. No, this, I mean, this again, the same answer that either the return is wrong or the software is wrong. If there is open demand notices from last year, that means they have not taken the right action in the last year, last 3 years. They should have perhaps filed an appeal. I would recommend them to do it immediately if not already done. That is
Azul,
for
are you there?
question number 1. Out of frustration this year, we paid the surcharge, and I would say that was not required. But nonetheless, now nothing can be done once you have already accepted and paid the higher tax. Question number 2, what are the items that can be taken as expense for external income of? Okay, so at this question, Arun sir, I may have to speak on mutuality.
So shall we take this up down the line, focus
Yeah.
only on income tax and then come back?
Yes. Okay.
Let's remember to take this up.
Yes.
Yes, Mr. Vasuki is here. He has raised this question. Was informed that during rectification on uploading ITR 5, we need to upload a few new documents.
Yes, sir.
No, as far as I know, there is no document that needs to be uploaded during ITR 5. Then alternatively, a physical visit to office is necessary. No, the entire income tax department now runs on faceless regime. It is possible to visit the your assessing officer, but it is not necessary. It is optional, but it is not necessary. In this
And
case,
not recommended also, right?
which office to visit would depend on where your PAN lies. Generally, it will be in Kormangla, but you have to log into your e-filing profile and see who is your assessing officer. There is a tab which says see your assessing officer, and based on that, you can go and visit, but which is not required.
Thank you, sir. But just to know that I was told that when we file this ITR 5, there is a provision in the website itself to upload certain documents saying that, you have been all discussing that the surplus generated in the income and expense statements are not distributed to any of the members. So that declaration perhaps would have to be given to them. And that is what I was told. So the chartered accountant or our auditors say that they don't remember that there is any provision in the website to upload additional documents other than ITR 5.
Yes, that's my understanding also, because the income tax return that we file is not verified by any human being. It is a completely automated process. So there is no option of uploading any documents. Uploading of documents takes place when your return is picked up for scrutiny by a human being, that is the assessing officer. And at that time, you will have the option to upload various documents. But at the stage of ITR, it is a automated process.
Yeah, this means what I understand from your explanation is when we file the appeal as per your whatever template you are going to provide us, our auditor should be able to file an appeal online. And then based on that, if there are any further communications from the department, we'll have to go with our supporting documents to defend our case.
Slight modification. you file an appeal. At the time of filing an appeal, you have the option to file other documents that you feel are relevant to the case you are making.
Okay.
Thereafter, your appeal will be picked up for hearing and you will get a notice which will also be online, and you will have the
Okay.
option to file a reply online. There is no need to go to any income tax office. When you
Okay.
file the reply online pursuant to the notice issued by the appellate authority, you will have the option to upload further documents that the appellate authority may feel is required from your side. For example, they may ask for a copy of your bylaws. They may ask for a copy of your registration, which you may not have uploaded when you are filing the appeal. Thereafter,
Okay.
you also have the option to ask for a video conferencing hearing that will
Ah.
also be completely online. The entire appellate process is virtual and there is no need to visit any office.
So all this, what you are saying, our auditors will physically represent us and then do all this online, or
No, no,
the members of the
they will do
association.
everything online. No
Okay.
physical, nothing is
And
physical.
no participation from any of the MC members.
No, absolutely not.
Oh.
You only
Fine,
have
sir.
to authorize, the MC has to only authorize a chartered accountant or a advocate or an income tax preparer or a CS or a CMA or any graduate. They have to authorize on the MC's behalf, and they can appear for you until the case is disposed. There is no necessity to visit personally because it's a civil matter, and there is no necessity for the aggrieved party to visit themselves or to appear themselves.
Fine, sir. Thank you very much.
You're welcome, sir.
Okay, thank you, Vasuki. Chetan has asked two questions. GST will cover later. This is now other matters in any case. Interest earned from FD, income tax implication. It is offered to income tax, right? Hemant?
Yes, so this
Yes,
will again
yes,
come in the mutuality thing. I think this also we can take in the end. What is taxable, what is not taxable.
Okay. Or shall we do that now, Hemant?
How many more do we have?
We have a few
Questions?
more. Okay, let me go through this once.
Yeah,
Okay.
if it is something
Badrinath, are you
related,
there? We have a corpus account separately and we earn interest on that. On the same, we also pay 30%. How to avoid taxes? Okay, it's also part of the same, right?
yes,
Hemant?
mutuality.
Okay. How to minimize tax? It seems tax earned on deposit is exempt from cooperative banks is exempt. Is that true?
No, it is not true. It is true in Mumbai. As I explained earlier, there is a section called ATP, wherein if you are a cooperative society, there are certain benefits that you get when you deposit money in other cooperative societies or cooperative bank. Since we are not a cooperative society, we are a society. So generally, we get mixed up between cooperative society and society. So generally, we use the term society for apartments. So the society that we refer to in Karnataka are actually not societies per se, but they are AOPs. And for AOPs, this benefit is not available.
Okay. Suraj has asked, are there ways to minimize the ops tax? Again, shall we discuss under mutuality?
Yes, yes.
And the second point, maybe you can respond to how to understand that CA has filed differently as compared to last year. I would imagine this is a conversation that they have to have
with the CA.
with their CA. Yes.
So the other aspect, I mean, to add to this, ask your CA, take a printout of the income tax return. It will be a lengthy document, 30 pages, 40 pages. But it won't be an apple to apple comparison because almost every year they change the format of the return. There'll be certain additions, there'll be certain deletions. So you will have to, the easiest way would be to take printout of both the years' returns and see if anything has changed.
Oh.
So can I just add a question? I mean, or I mean, it is taken to that latter point of time.
Related question, Suraj, right?
Yes, yes, yes.
Yes, please state your related question.
Okay. When I checked with CA, right? So she said it is, there is nothing changed. I mean, as compared to last year. I had a good discussion with her. But then if I see all the parameters, the income, level of income versus, oh, nothing has changed from input side in the sense, the way we do, the way we operate, or things we do, right, from last year to this year, everything accounting is being same. But then, this year we got the notice. So now my question is, if let's say this notice holds true, so should we expect a notice for a previous year? I mean, if someone goes back, are we going to expect that?
So I already answered this question. If
Okay,
the
I joined late actually. I'm
if
sorry.
the
Yeah.
evaded income is more than 50 lakhs, then the income tax department can go back up to 5 years. If the evaded income is less than 50 lakhs, the evaded income, when I mean the income on which tax is not paid as per the department. If it is less than 50 lakhs, then they can go back up to 3 years. But in these kind of cases, it is highly unlikely. Although the law allows them to go, it is very highly unlikely.
Okay. Thank you.
Uh,
So Mr. Mahesh has said it is 10 years, but that was until last year, sir. Now it is the amendment has reduced it to 5 years. The latest budget amendment
But
has
how
increased
how
the
do they define
reassessment
the
to
evaded
5 years.
income? I'm sorry, I joined late because I didn't have the link. How is evaded income defined, Mr. Pai?
Evaded income is the income on which tax is not paid as per the department.
Yeah.
If you have filed the return saying your income is 100, but as per the department the income should be 200, and the evaded income is 100. 200 minus 100.
Okay.
The language used in the act is income that has escaped assessment.
Okay.
Okay, the next segment categorized as investments. There are a couple of questions on investments. What are good investments? This is just a short quiz. What are good investments that have given your association good returns? If you can please put it on your chat window, it'll be nice. FD, okay. FD is FD, FD. Okay. So each of you has mentioned FD only for safety. Okay. Awesome. Partha, you've given a great response. We many times forget the, return on investment. If we invest in some of these kind of projects, like rooftop solar projects, rainwater harvesting projects, reuse of treated used water, if you're not using your treated water already used water, again, it's a fabulous opportunity for you to invest and gain much greater returns than what you can get from banks. So please use these opportunities. BAF has excellent amount of resources, skills, capabilities, advices on all of these subjects. Improving your waste management practices will also, optimize the cost for you in the short term and in the long term, not just for yourself, but your, future generations also. Please put these kind of investments also in. And then apart from FD, many times projects get shot down because of the quantum of investment. But you look at some of us who have implemented rooftop solar, we've recorded 20, 25%, 30% return on investment. Thank you so much, Partha, for that response. Questions from Sudarshan and Shilpi. Can you take this up, Sundar?
Yes. So other than fixed deposits, legally the investment of the RWAs are governed by Section 20, if I remember right, of the Indian Trust Act, which provides the investment choices. Fixed deposit and mutual funds are also there. And fixed deposit can include bank as well as corporate fixed deposits. But as an advice, what I would say is, please go for the mutual fixed deposits, avoid cooperative bank deposits. Then if it is a AAA rated mutual fund scheme, like earlier HDFC was a AAA rated mutual fund, fixed deposit scheme. But now that is merged with the HDFC Bank, so it's no more available. And you can also look at other corporate fixed deposits like Sundaram Finance, if they are AAA rated. I'm just giving an example. But this will require your AGM to approve it. And generally, most of the associations have found that the AGM, they are not able to muster the necessary approvals to go beyond the fixed deposit. Then similarly, you can also look at debt schemes of mutual funds. Equities, please avoid, because equity is fraught with high risk, and association managements do not have the expertise. And I know certain cases where people invested in stocks and then lost heavily. But you can invest in safe debt schemes of mutual funds, which are again, there are schemes which invest only in AAA rated instruments. You can look out for such schemes and then invest. But normally you cannot get any substantially high interest rate than the bank FDs. Maybe at best, mutual funds can give you 1 percentage point more if they are good AAA rated investments. So do not waste your time too much searching for the best scheme, because that search will be futile.
Yeah, thank you, Sundar. And please keep in mind, your bylaws also may have specific prescription on this subject as to what you can do and what you cannot do. Please be please abide by that. And of course, the general body, please keep them informed of any deviations and seek prior approval. And this is public funds. So safety is paramount.
Hi, this is Sudarshan here. Thanks for taking up my question. So we do have a provision in our bylaws for allowing the association to invest in other means. Again, like you mentioned, subject to approval from the AGM, right? So that provision is definitely there in the bylaws. We would definitely adhere to those provisions. But what I wanted to understand is, if we do take that route, then what would be the KYC norms applicable for an RWA, given that an RWA would be considered an association of persons from income tax perspective?
No, that institution will have the KYC and they will demand. For example, if you take LIC Housing Finance, moment you say you are an AOP, they will say that you are not eligible to invest in their fixed deposit schemes. Like that, each institution will have their own rules. You'll have to go by that.
Okay. Okay, thank you.
But again, one more correction. To be on the safer side, when you take the AGM approval, it cannot be a category approval. It has to be specific named approvals. Like, for example, normally people will take approval saying that scheduled banks of Reserve Bank of India, scheduled banks. That means all scheduled banks only will come, and by default, half the cooperative banks will not come. Similarly, if you are saying that you will invest in corporate fixed deposit, preferable if you have done the research to name the corporate fixed deposit, the company name, and also the selection criteria like fixed AAA rated deposit schemes, and then take the approval, so that tomorrow, if there is some mishap, the office bearer should not be blamed, the poor treasurer should not be blamed for it.
Yeah, got it.
Thank you. Thank you, Sudarshan. Shilpi, I hope you are there and you hope you heard that. This was done. So the next segment is on goods and services tax. There is Karthikeyan who's asked GST for maintenance fee collection limits and clauses. Sundar, are you able to take the subject?
Yeah, I will do that. But I want to state one general thing. There is an extensive and detailed note on the GST for resident welfare associations in the BAF portal. I would request all of you to download that and read, because most of these questions have an answer there. Having said that, since the questions are asked, I will definitely ask. So the first question is GST for maintenance fee limits and clauses. There is nothing as limit other than the 7,500 rupees. And the circular under which this limit is mentioned is available in the guidance note. Please download and read. Then the next question is GST applicability towards collection of sinking fund. This again is available. All collections by the association is coming under the ambit of GST. Only collection of returnable deposits are not covered by GST. And normally no RWA needs to collect money which is returnable. Therefore, the answer is that any amount you collect from anyone is subject to GST, subject of course to the 7,500 rupees limit. Third is donation received from non-member sponsors. It is fully subject to GST. There is no, even the 7,500 rupees limit will not be applicable. Even if you collect 5 rupees as a sponsoring fees or advertisement fees, you have to add the 18% GST to it. Unless your overall association income is less than 20 lakhs. Yeah, next, Arun.
Excellent. Thank you, Sundar.
On the income tax implication on donations received from non-members, I will answer along with the topic on mutuality.
Okay. Hemant, we have reached the end of the questions. We have the chat window, but before going to chat window, maybe I will request you for the mutuality.
Yes. So the concept of mutuality, to summarize, says that one cannot make profit from oneself. So all the income and expenditure, income earned from members and the expenditure incurred thereafter is outside the ambit of income tax. It falls within the ambit of GST because it is specifically included subject to the exemption limit of 7,500. But for the limited purpose of income tax, any income taken from members or collected from members, be it in the form of maintenance charges, corpus, parking charges, clubhouse, anything, is outside the purview of income tax. The corresponding expenditure incurred in the form of salaries, in the form of FMS vendor, in the electricity bill, water bill, everything is also outside the ambit of income tax. So when we calculate the taxable income for an association, the correct way would be to exclude both mutual income and mutual expense and only consider non-mutual expense and non-mutual income. Now, what is non-mutual income? It is tabulated elaborately in the BAF IT primer. To give examples, income received from non-members. So bank is a non-member. Bank is not a owner of your association. So bank would also fall under the category of non-member. So interest earned from FDs, whether those FDs represent your advance maintenance collection or represent corpus or sinking fund or any name whatsoever, any interest earned from your savings bank or fixed deposit is to be offered to tax. Any sponsorship income received, sponsorship income is received from a non-member, again it is subjected to income tax. Any advertisement is also subjected to income tax. Any money received from non-members would be subjected to income tax.
Okay.
Am I clear on mutuality? Or anybody has any queries on mutuality, they can probably ask now.
Yeah, any questions on mutuality,
I,
please?
yeah, I just had one. This is Krishnan Subramanian. I'm from Sankari Apartments. When you say, mutuality where income sets off the expenditure, um, then in that case, most of the apartments will not have any income which is taxable, isn't it? I mean, why would there be an income? Because most of the income is derived out of maintenance or sinking fund, and the expenses is towards whatever expenses we incur for the association. So there wouldn't be, unless and until, like what you said, the bank interest and all that, which wouldn't be substantial enough unless we are a very large apartment. But is my understanding correct on that?
Whatever may be the quantum of your taxable income, if it is below the slab rate, I mean, then there won't be tax. But if it is above the slab rate, if MMR is not applicable, then whatever you earn, you have to pay tax. Some apartments may pay more tax, some may pay less tax.
Okay.
Mr. Hemant, this is Vasuki. I have a small question on this income. Apart from the interest earned from deposits and then the income earned from the non-members, supposing we have a surplus of income and expenses, for example, I collect 100 rupees as maintenance charges and we are able to save 20 rupees.
It is
And
outside. It is outside the ambit of income tax.
So we don't have to declare that in the income.
No.
But eventually what we do is that 20 is again translated in the form of an FD as maintenance
Whatever
fund.
interest you earn on that 20 rupees FD will be subjected to income tax.
Okay, fine. Understood, sir. Thank you.
Okay. I am moving to the chat window questions. Sambit mentioned that filing date is dependent on whether it is a non-audit or audit. Any
Yes.
views on that?
Yeah. So it's slightly a gray area. What income tax says is when you need to be audited, then the due date is not 31st July, but it is October. So what does audit mean? So audit can mean audit under Income Tax Act or any other act. The KOA, in my understanding, does not mandate an audit.
It mandates, it says
No, it talks about audit.
accounts must be not audited. You're right. Must be
Yes,
presented to the AGM. Correct.
Yes. So there is no requirement to audit and place the books before the competent authority. If there is, so the general conservative view is if you are audited under Income Tax Act, that is if your income from other source or the non-member income exceeds the threshold, and if you fall under tax audit, which will be very unlikely for most of the apartment, maybe very large apartments that have huge interest income may fall under that. But sorry, that also will not happen because it is not business income unless they declare it as business income. Most of the apartments won't fall under the bracket of tax audit. So to be safe, we can consider that the due date is July.
Okay.
Next.
Mr. Sambit can probably clarify that when he says depends on audit or non-audit, is it referring to audit under Income Tax Act or any other act? If it's still
Sambit, are you there? It's okay. We'll move on.
Okay.
In case of Bhaskar says in case of associations who are not registered, and he has a question about slab rate or MMR.
I mean, it probably help under what act they are registered.
AOP. No. If you're not an association of persons, then it doesn't come up for discussion at all.
Yes.
Yeah, not in this conversation, right?
Yes. Then probably they would be registered as a company, or they would be registered as a cooperative society. Both regimes are very different, and
Okay.
we'll need to
keep
have
it
a
out of
separate.
scope for today. Can you please define member for the purposes of AOP and the section?
No, member of a AOP is a group of people who come together for a common activity. And in the context of apartment, a member would be an owner.
Yes, Satya, that was for you. Mahesh, 167B MMR is not applicable in my opinion.
This is a very contentious topic. I would probably take this one-on-one with Mr. Mahesh. It's a debatable topic.
Okay. If we have already filed returns with MMR, can we file a revised return using these slabs?
You cannot file a revised
Yes.
return now. You can perhaps file an updated return if I have my doubts, because in updated return you have to offer a slightly higher income than what you have already filed the original return. But whether you can reduce the tax rate, I have my doubt.
Okay.
You can give it a try.
Sambit is saying the site is still saying MMR is applicable.
We
He was
already
the one who mentioned something early on.
we already had this.
Yeah,
We discussed this.
we discussed this, yeah.
Yes.
Vasuki says after you arrive at net taxable income, the CPC straight away goes to MMR, whereas our auditor has taken the slab rate.
Yes.
Did we discuss this also, Vasuki? I think so,
Yes.
right?
Yes, discussed.
Okay. Mahesh, 167B. Okay. Okay, so the template, we don't want to send it by default to everybody. So we'll when we get back to you, please say that, please share the template. We will be sending an email at the end of this program within the next 2 days. At that time, please respond to that.
Yeah, whoever wants, whoever
only
asks specifically for it, we can
Sure,
perhaps share.
sure, yeah. So
Yeah, we'll share the template only for people who have received adverse assessment orders where there is a need to appeal.
Yes.
sure, yeah. Mahesh is saying surcharges because MMR department itself might understand the mistake and pass rectification.
It
It's a
is
comment only.
It is quite possible because department has done mass rectification a month ago, but that may happen or may not happen. So I would say let us not wait for department to rectify. We have to take remedial action from our side immediately.
Okay.
Hemant, one question on behalf of members. This appeal filing does not involve any major fee payment, right, to the income tax department?
No, it is 1K. Statutory appeal filing is just 1K.
1,000 rupees.
And
Yes.
what about the auditors? Will they ask for a huge fees?
I mean, there is no right answer to this. It depends on who is filing. Some may charge more, some may charge less. See, we can do one more thing. If individually they file, the effort required in doing the research and maybe more. If there are substantial number of members who are willing to file an appeal, what we can perhaps do is we can identify one vendor, one CA who is good at this, and we can probably ask for a good rate or a fixed rate for filing the appeal, appearing until disposal. If there are substantial numbers, then we can do that.
That will be good. I think based on the members who ask for the template, they can also, if required, request help on this. For an
Yes.
affordable vendor, I would say.
Yeah, we can identify somebody external CA who takes appeals, and we can probably ask for a good rate.
Okay. Well, let's cycle amongst
The-
ourselves, Sundar and Hemant, and then we'll confirm.
Yeah. The reason why I asked this question was because based on the questions of the members, I find that the level of confidence on their respective CAs seem to be very low, the way they are asking questions here. which is why I raised this point. Okay,
No,
go ahead, Ashok.
most
Arun.
of the CAs who will do the accounting and compliances and filing returns will generally not be well conversant with the process of filing appeals and how to represent and how to
I
file
understand.
the
That's why.
grounds. So, I mean, it is fine. They may not know. So if individually, some CAs may charge 50K, some may charge 1 lakh per appeal. So there's really no benchmark to it.
Okay,
we'll
right.
move forward. Ramesh has shared the circular.
No, this I don't agree with this view because what we are talking about now is 167B, and now from last budget it is 115 BAC. So this is it's a debatable topic. We can
Okay, we'll leave
we
that
don't
then.
have to debate here.
I'm sorry to say that this also has to be taken into account. The member CBDT himself has taken this on record, and I won my faceless appeal. This is no longer a sense of debate. A lot of people in the government itself have said very clearly, especially at CBDT and other levels, their intention is not to tax RWs. In case a lot of people have this problem, as requested by one of the members, I think we need to file a small letter by email with CBDT, and they're quite receptive. They do take it up. Someone said finance minister doesn't look at it. That's fine. Collectively, amendments to the Income Tax Act have been done by many trade bodies and others.
Got it, Ramesh.
Sir, writing, I would say writing to CBDT or finance minister can be done parallelly with what statutorily we have to take steps. Within 1 month of receiving an adverse order where there is a demand, the law says we have to file an appeal. If we do not file an appeal and we keep writing letters,
We are not talking of not filing
it
appeal,
will
Hemant.
result
Hemant, we are not
result
talking of
in
that, please. We are not talking of not filing appeal. We are talking of the need to collectively file. And that has to be taken up as a body. You see, that has never been undertaken in this whole discussion, and I feel very strongly about it. And I think that is an area where we need to work on. It's completely a different track. It's a completely different track. Yes.
Ramesh, now that you're here, we can take it up.
Yes.
Okay, Prabhu Shankar is saying we have incorrectly filed under slab rates instead of MMR last year. Filing the slab rates this year also, and if notices are issued, will they go back? We've covered this subject.
Yes, I've answered.
Okay.
Possible, but highly unlikely.
Right. And Mahesh, again, other than societies registered,
167B now we are not discussing because we are now under the new regime. So what 167B says is no longer relevant.
Okay. Notice has recently been issued to pay tax at maximum marginal rate instead of 115 BSC. Are we saying that this is due to software glitch and can be challenged? I think the answer is yes, right?
One of the possibility is a software glitch. One possibility is that there is some mistake in the return. And either way, you can take remedial action. If there is a software glitch, then the best remedy is to file an appeal.
Okay. Krishnan Subramanian, we haven't got any notice as yet. Should we expect one? Please don't expect any. Right.
Okay, this is slightly dicey. And also, we are classifying maintenance as income. Are you referring to your profit and income and expenditure account, or are you referring to your computation of income? If you are classifying maintenance as taxable income, then you have waived off mutuality. That's a very slippery slope.
No, we are not. So I just wanted to have a clarification on that. So it is part of the mutuality only. So I just had a doubt on that, so I asked the question. You can ignore that part of it. Thank you.
Okay, great.
Okay, Mahesh, again, 10 years, I believe, more than 50 lakhs.
No, it is not 10 years. From October onwards, October 24 onwards, it's 5 years as per the new amendment in the budget.
Oh. Issues tax, right? No income has been evaded.
Debatable issue.
Okay. Thank you so much, Partha, for these messages. Investments in solar, treated water, rainwater harvesting, amazing responses. So,
Okay, I want to explain the tax implication of this, Arun sir, if I
sure,
may.
sure, please.
So in our apartment, we have installed solar rooftop electricity project, and our ROI is in excess of, I think, 16 to 17 as compared to the FD rates. That time was around 7, so more than double. And on 7, whatever interest you earn, you have to pay tax, whether at MMR or otherwise, you still have to pay some tax on the interest earned. Whereas on savings that you make on electricity, there is no tax. So if you compare the effective interest that you earn, the return on investment that you get from solar would be 3 times more. So as on date, I understand that the laws are very, very favorable for investments, and that is the best investment mode if you have good money in your association.
Good money and space for solar.
Yes, naturally.
Yeah, this government bonds was in response to investment. The last
Government
question
bonds,
is,
I would say the only disadvantage is liquidity. That if you want to liquidate, if you have some emergency expenditure, government bonds may not be a very good option. It's unless it is matured or there is redemption, you may not be having access to the funds immediately.
okay, just
Hemant, just a small clarification. There are quite a few government bonds which are traded in the bond market.
Yes,
If you
yes.
buy those,
Yes.
then you can
I'm
easily do
referring
that.
to bonds that are not listed.
Yes, that's correct.
Yes. You are right, sir. You are right.
okay, just on the previous point about solar investments, one of the things that BAF is working on extensively is trying to enable bank loans. Many banks have refused loans for associations. We are working actively. In fact, there was a meeting yesterday also, wherein the bankers, the group of bankers, government bankers, we had a conversation with. I don't have an update from that. We are pushing them for giving loans to associations at reasonable rates such as 7%, etc. So let's see how that works out.
Yeah.
Last question.
Sir, that would be great because we were not able to get loan for our solar project at less than 16-17%.
Right. So we're working on that, ma'am, extensively.
Thank you.
Hope we can see light of the day on that.
I have one point as a treasurer, having been treasurer of associations, and I was also president. See, the association office bearers keep changing every 2 years. Now, who is going to put their signature every 2 years? The new incoming office bearer refuses to put his signature on the loan document. The bank will not be able to recover from the association. Association has to be represented by the office bearers. So the loan will be a dicey process. So I would say that trying to secure a loan is a very a difficult process. That's what I would say. As different from a company getting a loan or an individual getting a loan.
Yeah, what we are working on, Sundar, is without someone having to give their personal Aadhaar cards and personal PAN cards and personal assurance, etc., is how we are trying to work with various agencies.
Arun, I can come in, Arun?
Yes, please, Satish. Thanks.
Yeah, I was there part of the yesterday's meeting of the Bankers Committee of Karnataka, and most of the bank is ready to give the loan, and there'll be a 7% initial stage where maybe up to 50 kilowatt, 7%, after 52, if it is more, it is a little bit more. So minimum, they want to do it only 7%, but they don't want to give for big tickets. So that discussion is on, and central government has given some direction to the bank, and definitely something going to happen. But if it is below 100 kilowatt, definitely people are ready to give, and there'll be some condition in the sense, like they may treat this plant as a MSME, and try to give that plant itself as a guarantee. So there's no problem of office bearers changing and every 2 years happening. And what we know now is with the subsidy, it is 3.5 is the return of investment. So bank also not very keen, saying that no, within 3 years is the risk they have to carry. And I think people are open to give loan, but it is yet to be declared by the government. And BESCOM is given nodal agency to work with the bank and come out with a policy. That will happen maybe this month end.
Currently,
Excellent.
the banks are considering solar loans as unsecured loans.
They are considering only up to 3 kilowatt.
Okay.
So individual house they are considering now, but they are not
Okay.
considered now for the society
Association.
for a common association for the common area.
Okay.
Ma'am, your name?
I'm Iqbal Kaur, treasurer of Springfields.
Okay. Just watch out for the upcoming BESCOM Parihara session also and do participate. And if we
Definitely.
send out an advisory on the subject, when we get clarity on the loans, please look at that also.
Thank you, sir.
Thank you so much. The last question is Anand's question. We have a peculiar situation where amounts collected ostensibly for purpose was used for maintenance. What should be the tax impact? Hemant?
I don't see any tax impact. It is members' income, it's mutual income, mutual capital money that is used for mutual revenue expenditure. There is no income tax implication.
Okay. That's more an internal indiscipline.
Yes. I would say it's a internal matter and would not be subjected to income tax.
Right. Okay. So with that, let me just see any more chats over there since I copied them. Yeah, there are. George Isaac is asking if maintenance charges less than 7,500, but sinking funds pushes it. Whether
Yes.
GST have to be paid? Yes. The answer is yes, George. Sundar, yes, right?
Yes.
Yes.
Any amount collected from the member.
Yes. Biswajit, we have two phases and there are common expenses. While cross charging to phase 2 and phase 1, will there be applicable GST?
Yes.
Two
will be
legal
applicable.
entities seems like.
Applicable.
George, you there? Okay, I'll go
No,
further.
this is not
Naresh?
George, this is Biswajit. It will
Sorry,
be
yeah,
applicable.
Biswajit, sorry.
Applicable.
Okay, Naresh Shetty, is registration under GST compulsory for an AOP even if maintenance is less than 7,500 but annual maintenance is more than 20 lakhs?
Sundar
More
sir,
than 20 lakhs has to be registered.
Is it 20 or 40, Sundar?
20.
20. So Naresh, that's the answer. So that concludes all the Q&As also. As a last input to all of you, hopefully you found this session useful. We will be sharing a feedback link within the next couple of days. Please do give your feedback. And this session was recorded. Hopefully we can upload the recording on our BAF YouTube channel also. Before I close, may I request Satish Malya to come on board and address the gathering, maybe a minute or so. And my personal thanks to Hemant, my personal thanks to Sundar, my personal thanks to Valli Srinivasan also. Satish,
you're
you
most
there?
welcome.
Arun, I think you can carry on because I'm still driving back home in the car.
Okay.
Okay, so I think thank you for conducting a wonderful session. I think about 49 to 50 people were there until last stage. So I think it's a good session. I think you can close it.
Thank you so much, all of you.
Thank you.
Thank you,
Thank
one
you.
and all. It
Thank
is a
you.
very useful session.
Thank you.
Thank you.
Thank you. Thank you.
Thank you. Thank sir, can we log out?
Thank
Yeah,
you,
you
Hemant.
can.
Thank you, Sundar.
Yes, sir. You're
Yes,
most
I'm
welcome.
logging out.